Hey guys, hope you're doing well out there. Welcome back to the channel. Jumping into Tesla's Q4 results, those came out after the bell. The past quarter didn't look all too good over at Tesla, and then as we look ahead to the next two quarters, those also expected to be pretty challenging. They're expected to not really grow on that bottom line. We'll jump into the comments made by Elon Musk on Tesla's earnings call and then jump into the financial summary. This was Tesla's Q4, so we'll take a look at it from a high-level 2023 overview. We'll also jump into the production and delivery numbers for the full year, and then as always, jump into the financials as well. We'll also take a look at Tesla from a technical perspective. Coming into earnings, this one was set up to break hard, either up or down. Seems like it is wanting to break to the lower end. We'll highlight some levels where I think Tesla is headed in the short term, and then I think where you can come in here and step in and pick up shares in Tesla. As always, if you are new to the channel and find this type of content valuable, be sure to hit that like and subscribe button below. It would be much appreciated. Shares of Tesla over the past 1 year have been rallying nearly 45%, but that doesn't paint the whole story, as basically the stock made the majority of its move early on in 2023, and really since June of last year has been basically locked in a sideways consolidation pattern. Year to date, the stock is down over 15%, close to 16%, and after hours down another nearly 6% on the heels of their Q4 revenues coming in at $25.17 billion. That was good for just 3.5% growth year over year. Boy, I tell you what, if you are Tesla, growing just 3.5% on your top line simply won't cut it, especially when those top line revenues come in as a miss on consensus estimates, which were nearly $600 million higher. As we walk through today's results, we'll see revenues really struggling, even the operating margins, gross margins, net income margins, everything really kind of struggling over at Tesla over the past few quarters. The main reason is due to the reduced vehicle average selling price. This is basically the primary reason Tesla highlights due to their revenue slowdown. We've seen a ton of price cuts over at Tesla over the past few months, and really that is starting to show on their top lines, not growing nearly as fast. And then they're also spending a decent amount on capex as they're trying to ramp up Cybertruck production. Those Cybertruck assembly lines certainly not cheap, and you see capex spend of $2.3 billion. Last year you were closer to $1.9 billion. So few headwinds Tesla is facing: a slowdown on their revenues due to reduced average selling price, and then also a higher spend in order to ramp up Cybertruck. In terms of bottom line EPS, that came in at 71 cents on a non-GAAP basis. That was again a miss of 3 cents. So Tesla missing both on the top and bottom line. As we look ahead, so this past quarter, that was EPS decline of nearly 40%. And then as we look ahead to Q1, which is the current quarter we're in, Tesla expected to decline EPS by another 5%, and then even Q2 EPS expected to be flat on a year over year basis. Really, we have to look out Q3, Q4 and beyond in order to see Tesla growing back up 50% on a year over year basis. On that EPS side, similar story on their revenues, really a slowdown in this most recent quarter, and then you have to jump ahead to Q3 to see that revenue pick back up nearly 30% growth. As we jump ahead to Q3, they'll basically be lapping the difficult quarters they've had in 2023. And so this story over at Tesla, really the next two quarters, I don't expect to be anything fantastic. You really have to look ahead 6 months out to see any significant gains over at Tesla. Now, along with the earnings report, what we got over at Tesla is a conference call and a few notable things on that conference call. The first one being Tesla is warning that vehicle volume growth may be notably lower in 2024 than seen in 2023. We'll jump ahead a little bit to the production and delivery numbers. So for the full year 2023, they produced roughly 1.84 million vehicles, majority of those being Model 3 and Model Ys. That was growth of 35% on that production side. Again, keep in mind, this is for the full year. And then deliveries for the full year coming in just a shade over 1.8 million vehicles delivered. You see, 2019 all the way back, they were delivering just under 400,000 vehicles. That has now jumped over up to 1.8 million years. That's over the course of 5 years. So year over year, even that was 38% growth on that delivery side. And then again, keep in mind, Tesla is saying in the 2024 year, they're expecting a significant slowdown in vehicle volume growth. So maybe instead of 38%, they'll look to grow vehicle deliveries maybe 30% or 25%. So keep that in mind. Tesla kind of tampering expectations over the next 1 year. Now, Cybertruck production will also continue to ramp in 2024. That's going to be a big capex spend over at Tesla as they look out to build those Cybertruck production lines. Now, on the conference call, Elon Musk did toot Tesla's horn just a little bit, calling Tesla the most advanced company in terms of AI inference efficiency as it comes to full self-driving rollout. Another thing Elon was asked was about his comment gaining more control over at Tesla. This came out I'm guessing a few weeks ago. Basically, Elon Musk asked for more control over at Tesla, and he basically said that his push for more control is based off of worries about the dangers of AI becoming too powerful, and that activist investors could have an undue influence making the decisions on potentially dangerous technology. I think more so it's the second half of this where he doesn't want activist investors to have more power than him. I think the part of AI becoming too powerful, that was just a little bit of sugar on top, but I think really all Elon wants is control over at Tesla. He doesn't want to see activist investors really having more of an influence on the company than him. When it comes to Cybertruck demand, Elon said that was off the hook. Certainly you have a group of people really on launch, they'll look to pick up the Cybertruck no matter what the price point is. You'll see a similar story from Apple likely in regards to their Vision Pro goggles. You always have a subset of people really that are likely to pick up on the new technology regardless of the price point. It's really Cybertruck demand, how that continues over the next few years. That is really what's going to determine whether the Cybertruck was a successful product or not. In terms of their Optimus humanoid robot, Elon also said that could end up being the company's biggest business, probably down the road. And then finally, Elon said he sees a path for Tesla to be the world's most valuable company. That is another bold statement. Elon certainly tooting Tesla's horn. Right now, they are the 10th largest company. So quite a ways to go if they want to become the largest in the world. Now, if we take a look at 2023 as a whole, revenues coming in at $96.7 billion. That was total revenues, including automotive, energy, and services. That was good for 19% growth year over year. So look, if you take 2023 as a whole, not a terrible year over at Tesla, 19% growth on revenue, certainly not bad. It's not great, not basically what Tesla has been putting up really over the past few years. But again, if you strip out just Q4, it looks a lot worse. If you take it as a full year picture, 19% growth, not all too bad. Where it gets worse is when we go underneath revenues. When we take a look at gross profit, those were down 15% year over year, coming in at 17.6 billion. Last year, we were over 20.8 billion on those gross profits. Gross margins also declining 7.3% year over year, now coming in just a shade higher than 18%. And so really, while revenues seem to still be okay over at Tesla, it's their higher capex spend and then lower average selling prices on these vehicles that are really hurting margins. We see operating margins also declining 7.5 percentage points, now coming in at 9.2%, and then adjusted EBITDA coming in just over 17%. Last year, we were closer to 23%. So really, that's been the story over at Tesla. Higher capex and then lower average selling prices, both contributing to lower margins. I expect that trend to just basically continue over the next 6 months, and 2 difficult quarters coming up ahead for Tesla is what really we can expect. Now, in terms of this most recent quarter, automotive sales coming in at 20.6 billion. You see year over year, not a huge increase. Last year, we were at 20.2 billion. So just a $400 million increase on those automotive sales. In terms of the cost of those sales, those growing much faster, coming in at 17.2 billion. Last year, we were at 15.4 billion. So nearly a 2 billion rise on the cost of those automotive sales. The services business over at Tesla still showing pretty strong growth, up from 1.7 billion now up to 2.2. And so services growing pretty rapidly, but again, it's a much smaller business. The story over at Tesla is really automotive sales. This is what the company moves on. If automotive sales and production and delivery numbers come up, yeah, that'll basically be enough to help Tesla stock and really help margins. And the whole story over at Tesla begins to look good. Now, in terms of gross profit, that came in at 4.4 billion. Last year, we were at 5.7. And then income from operations coming in at just over 2 billion. Last year, we were nearly double that at 3.9 billion. When we come over to net income, it does look a bit wonky at 7.9 billion. Last year, we were just at 3.7 billion. And so their net income substantially higher. You have to take a look at a one-time benefit from income tax of nearly $5.7 billion. So if you strip this one-time income tax benefit, their net income really coming in just over $2.2 billion, we'll call it. And so again, year over year, that would be a substantial decline. When we look at EPS, similar story, $1.07 was the EPS last year, now at $2.27. But again, keep in mind, these are GAAP figures adjusted for this one-time income tax benefit of roughly $5.7 billion. When it comes to weighted shares outstanding, not really ticking down all that much, basically flat on a year over year basis. So the past quarter, really rough for Tesla, and they're really expected to see that pull forward and carry on over the next 2 quarters, really. Now, it's not all doom and gloom over at Tesla. This company's balance sheet still looking phenomenal. Total assets coming in at over $106 billion. Last year, you were at $82 billion. In terms of cash and cash equivalents, those rising roughly $7 billion. And then the other main number on their assets is the inventories. Those not really taking up all too much. You see last quarter, they had $12.8 billion. Last year, they had $12.8 billion in inventory. Now that jumping up just to 13.6. And so I think the important thing over at Tesla is really if they didn't do all those price cuts, if they didn't reduce the prices of their Model 3, of their Model Y, the inventory number over at Tesla would be significantly higher. I think the main aim was to move volume, was to come in with these delivery numbers exceeding 1.8 million. And just in order to do that, those price cuts, in my opinion, were absolutely necessary. This was a difficult time for the consumer, especially for high ticket items like a car, especially an EV. And so those price cuts helping Tesla to keep inventories roughly in check. In terms of liabilities, coming in at $43 billion, not all too much higher from a year ago where they were closer to $36 billion. So all things considered, balance sheet looking very strong continually over at Tesla. In terms of cash flows, again, we have that $7.9 billion of net income. Keep in mind that's adjusted for that one-time income tax benefit of roughly $5.7 billion. And so as we move along these cash flows, you basically strip out that $5.7 billion figure. The other important number is CapEx. You see this quarter coming in at $2.3 billion in terms of CapEx. Last year, we were at 1.85. And so year over year, CapEx jumping pretty substantially. And that speaks to not only the ramp up of Cybertruck production, but also the fact that Tesla having to shut down a few Model 3, Model Y production lines as they look to refresh those models and then kind of upgrade the production lines for those models as well. Moving on to the technicals, coming into earnings, Tesla was actually coming in really nicely, setting up near the bottom end of this wedge, really had the ability to rocket higher on any good results or even decently strong guidance. But they came in with a miss on both the top line and the bottom line, and then their comments saying that volume growth would be slowing down in 2024. That probably sort of spooked a few investors. And so the stock now breaking down underneath our key level of support at basically $210 a share. Likely this one will follow through with this red candle I've put in and continue to post a few more red candles. Realistically, I think this one is coming once again closer to $150. That's roughly a 20% decline from where we currently are. Certainly a volatile stock. I don't doubt that this one has the ability to come back down at this level. There are a few levels of support along the way, and so this one will likely make a few stops. First of all, probably at $180, and then $170 will likely make a few stops. But I think strongest level of support still sits closer to $150. At that point, really not a huge panic moment. This one would really just retrace back to April of last year. So not really a ton to worry about, in my opinion. I think over at $150, that would actually be a pretty solid buying opportunity. I would look to step in shares of Tesla near $150. You can even look to buy this one along the way down, maybe just nibble in shares. I know on this channel, we generally don't like to buy stocks that are in a downtrend, and certainly Tesla would be in a pretty steep downtrend if this one continues to head lower, closer to $150. But I think the near term continues to look uncertain over at Tesla. Absolutely. I think the next 6 months is going to be extremely challenging, very uncertain in terms of what their deliveries will look like. And along with that, what their average selling prices will also come in. They'll likely have to continue doing pricing cuts and then really see what competitors are pricing their EVs at and go accordingly. So I think the next 2 quarters really continuing to look uncertain and difficult over at Tesla, which will likely put downward pressure on the stock. But I think over the long term, if you have longer than a 6-month horizon investing in Tesla, if you're looking out 2 years, 3 years ahead, this company will still continue to grow in a rapid way. Those deliveries will likely still continue to ramp up. And then over the years, as these Teslas drive, you'll basically have the realized benefit of full self-driving, of AI, of that Optimus humanoid robot. The efficiencies really will start to kick in, I believe, in a few years over at Tesla. And so if you get the opportunity with shares down to 150, I think that is a place where I think you can comfortably come in and pick up shares of Tesla. That would be a pretty solid buying opportunity in my perspective. Would also still be in the form of a uptrend over the long term. This one really bottomed out close to $100 back in January of 2023. And so even if you come down to closer to $150, yeah, this one will still technically be in a longer term uptrend. And so you can still buy the dip. And really that would be a buy the dip moment. I think if you have, again, longer than a 2-quarter time horizon with Tesla, that would be the next stop where I would really look to pick up shares in this one. That was my take on Tesla. Not a great quarter from a revenue and margin story, but I think over the next 2 quarters, that is really when the troubles for Tesla will continue to fade away. And then looking ahead to Q3 and beyond, that is, I think, when Tesla returns back to normalized growth and where I think the stock normalizes and continues to head higher. Full disclosure, I do have a long position in Tesla. In the long term, I am bullish on this company. I think over the next 2 quarters, you'll have a pretty good buy the dip opportunity. And I think that is where you step into shares of Tesla. Hope you enjoyed today's video. We'll be back again soon with more earnings on the channel. Stay tuned. Hit that like and subscribe button below for more analysis videos just like this one. Thanks so much for watching, and I'll catch you guys in the next video.